All right. Welcome, everybody, to the Currently Powerful podcast. And in today, I have Larry Lee here from, now, what was the name of your company? I forget.
Open mortgage.
Open Mortgage. And he's been
Yes.
following the banking collapse that's been happening. And so today we're going to talk about the banking collapse and how it will affect normal people and what effect it already is having on the market in general. Larry, so you've been watching this pretty closely. What have you seen happening, for example, in the mortgage market with this collapse?
So before I get started, I want to give you like a quick reason why I've been paying attention to this. Okay. I have clients that I'm literally locking loans on a daily basis, right? So I'm watching the rate and I'm like, okay, I think I should lock this rate right now for this person because it might go up, it might go down, whatever, right? So I'm keen to the different nuances of what's going on with the rates. Okay. So the rates were ugly in February and they wouldn't stop being ugly. In March, they were still ugly, right? And then I went ahead and locked the rate on Thursday. Okay. Thursday, I don't know what the date is. Let me find out the date because I want to make sure it's on the call. The ninth. So March 9th, 2023, I locked the rate. Okay. Thinking that it was a smart move because rates were not they were not going down, they were going up, right? Friday morning, Silicon Valley Bank was announced a bank failure, meaning the FDIC took over because uh, Silicon Valley cannot deliver on their actual promise, which is, of course, if you want to deposit money with us and you need to withdraw it, we can provide you the withdrawal. They were unable to perform, and therefore they were considered a failure. And FDIC took over, and now the insurance is taking care of all the deposits and the withdrawals that are being they're being asked for. Okay, that happened again Friday morning, right? Because of that, the mortgage interest rates dropped dramatically. I'm talking about like almost a quarter of a point. So it went from like sevens to like 6.75 or in that neighborhood, right? And when I say the rates, I'm talking about the general rates and average. It's not my rate, it's not anyone's particular rate. It's just an average rate of like all the banking industries, however they collect this data, right? So it made a huge impact. Now, you might be wondering why would this happen? Well, it's not that there's an inverse relationship between Silicon Valley Bank, a banking institution, and lenders who aren't really bankers, they're lenders, right? The reason why this happened was it was almost a ripple effect because of the lack of confidence on the banking industry as a whole. Investors were taking money out of the banking, meaning they're not buying banking type securities, and they were investing it in other places, which
Bonds,
happens
for
to
example.
yeah, which happens to include mortgage-backed securities and bonds, right? Mortgage-backed securities is an indicator of how rates are going to be. So the more mortgage-backed securities are being invested in, meaning purchased, the price of it goes up because the demand is higher, which actually decreases the rates, right? So the more mortgage-backed securities being bought, the more confidence there is in the mortgage-backed securities, the lower the rates become. So that's how the mortgage interest rates were affected by the crash of Silicon Valley Bank, which happened on Thursday. Sunday, Signature Bank, another top 20 bank, also crashed. Okay. And I don't know if this is a domino effect or whatever. It just happened within 3 days. So Silicon Valley Bank was number 16 and Signature Bank is number 20. Okay. So the second and the third largest bank failures in US history, the first being Washington Mutual back in like 2008 or whatever. So the second and the third largest happened within 24 to 72 hours,
That's
right?
just crazy. And I mean, they were
Yeah.
both heavily invested in tech and
Mhm.
crypto. And it could
Yes.
just even be, the regulators kind of cracking down on people that are in that sector as well. So,
Yes. Yes. So long story short, Monday was also a great day for mortgage rates. They already dropped like mind-blowingly low on Friday. They dropped even lower on Monday. It's like, holy crap, what's happening, right? So Monday was a great day. Friday and Monday were a great day to lock rates. So I made some mistakes with my clients, but there's no way I could have predicted a bank failure, right? I mean, I don't think anyone predicted that. Okay.
Yeah, that
Um,
came out of nowhere.
some people might have seen it happening, but they were probably in the inside. But like us civilians, we did not know this was happening, right?
I heard a
Um,
lot of executives were pulling their money out, and that's part of what caused that too. So
oh man, yeah. There's more to the rabbit hole that I don't even want to get into, right? I just want to talk about what's happening to us, right? There's too
yeah,
much. That's like another podcast that we need to talk about. If we want to talk about that part, right? Um, but yes, the rates have gone up today, so they bounced back a little bit, but still we're enjoying better rates than we did a week ago. Okay. So of course, my takeaway from all this is what's next. Are more banks going to fail, right? Are we seeing a temporary drop in interest rates for mortgage, or are we seeing sort of a trend? Are we seeing some like the beginning of something, right, where rates are going to stay low? Who knows, right? There's a lot more data that we can review. There's a lot more announcements that are happening, and again, we have to see, is there going to be a run for the banks? When I say a run for the bank, I'm talking about people, civ- uh, consumers losing confidence in the banking system and withdrawing all their money, right? And if enough people do that and enough money is being withdrawn, that can cause sort of a domino effect, right? Like theoretically speaking, that could happen, which might not be good for anybody.
yeah. Well,
So,
I mean, it would have to be really the multimillionaires or people that have at least around 1 million in the bank. They're the ones that are going to make that difference because FDIC insures up to 250K per person across all their accounts in a bank. So most average people, and now for what I'm seeing, it is the people with less than 250K that are the most panicked. They're the ones that are like, I'm pulling all the money out. The people that are into the major conspiracy theories, they're ready and willing to pull all their money out and put it somewhere else. But I mean, what are they going to do? Take it out and put it under the mattress, and then that's not really going to help anything anyway. So if we're looking at it, has to be more people with more assets and more money that would have to make a difference in what's going to happen. So for them, I don't see it as much of a importance that they would take all their money out. They can literally move it around if they need to, but unless there's some signs showing that there's some major collapses happening with where the majority of the wealthier people are putting their money, they're not going to want to jump out. They're going to want to keep feeding the beast and keep because what happened last time in 2008, they all got bailed out.
yep,
So, and there's also talk about um, the government setting up another system for making sure that there's another avenue of making sure banks don't fail. So, we have so many different options that there's not really a need to panic yet, but we'll find out as things keep unfolding. Because as we know, with 2008, once that first domino falls, they all just kind of start happening. So
yep,
really, we just need to pay attention and be ready to make moves if you have more than 250K in the bank. So if it's for the average person, you really don't have to worry about it because most people don't have more than 250K in the bank. And if they have that much asset, it's usually in different things like your property, your homes, and things like that are real properties and real assets that can't really be messed with like that. Now, the best thing that we've seen so far is that as consumers, as major consumers interest in the banking sector has dropped, well, it had a lowering effect on the interest rates because people were taking their money out of the banks and into bonds and mortgage securities, and which had that effect of dropping the price of the interest. So, which is great news for consumers who've been on the edge, sitting and waiting to make this purchases. Now,
yes,
what else can happen that could be detrimental? It would have to be something dramatic. So, usually, when things like this happen, other things happen. What can you foresee happening that could have a negative effect on people's everyday lives in this?
Well, I like the fact that you're bringing up the 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 idea that most people are not going to be impacted by these bank failures, right? Because normally the FDIC can cover up to $250,000 per depositor or bank client. Let's just call it bank consumer bank client, whatever, right? So
Yeah.
if you have less than $250,000, you have nothing to worry about. You can pull your money out, no big deal, right? It's the people that have over $250,000 that are going to have trouble, right? And a lot of these individuals or entities that have that are going to be like the larger companies, more entrepreneurial tech companies or whatever. I think Roku was one of them that was affected by the Silicon Valley bank crash, right?
Yep.
So you're right about that. If you're not one of those individuals or entities, you should have nothing to worry about. And I do agree with that. Um, but I also want to point out that and we're talking about perspective, we're talking about psychology. If the society as a whole decides to play chicken little and think the sky is falling, and everybody decides to draw out their money, then that can still cause problems, right? So you're asking what could happen? Well, it really depends on how people react to the news, right? And how people look at what's happening, right? Um, I don't know if Signature was a result of Silicon Valley Bank. I mean, it's really coincidental. Bank, the second largest crash happens, and then the third largest crash happens literally 3 days later. Is that a coincidence? I didn't read anything that said it was or it wasn't, right? But it seems like it might be connected in a way, right? And if that's the truth, then what else can happen based on the news? Number one big failure led to another big failure. Now we got two big failures. Is that going to lead to a third big failure or a fourth big failure, et cetera, et cetera, et cetera, right? So I think we would have to take a look out for that. I don't know if it will happen or will not. Again, it's really based on reaction of society as a whole, right? So potentially, like we talked about the domino thing, right? If people were to take this information as an indicator of what they should do with their finances and they react by taking money out of the bank and enough people do it, then I think they'll cause a little bit of a domino effect. And who knows what the repercussions are based on that happening, right? So
Or we're
that's a
back in the
potential.
roaring 20s again. So,
Yeah.
you
Yep.
know, it is cyclical. So there
Yes.
is definitely potential for dramatic issues that can come up from this. But you would think we'd have learned, we've been going through the largest rally in history, 14 years without a recession. And we
Mm-hmm.
definitely coming up on a recession. There's no question about that.
Mm-hmm.
So it's just a matter of if it's going to be a recession or is it going to turn into a full blown depression. Now, with these banking failures, there's definitely a very good chance that if it continues, that can definitely happen. And I mean, I know that Wells Fargo was having an issue with their deposits, people's deposits not showing up
Oh
when
well.
people were making deposits. So I haven't heard that they fixed it yet, but as a real estate agent, I make large deposits once in a while, so I haven't had to deal with that this last few days. So I haven't seen anything on my side, but there's generally people freaking out about the fact that they couldn't access the money that they're depositing to their accounts, and most of America lives paycheck to paycheck.
Mm-hmm.
So
Yep.
that's a big deal for them. So
Yes.
starting with that fact that okay, people are already having a bit of a distrust because they can't access their deposits. Now they're hearing about these bank failures. Yes, it's true that people don't have to worry about regular people with less than 250K in the banks do not have to worry about it. But I mean, how likely are they to trust the system when they couldn't even pull out money to make their payments? So if it happens to be that they're in that situation where they're like, all right, I need to go get some food and I need to take money out in order to pay for the food that I need to buy because, they don't trust credit cards or, whatever the case may be. If a majority of the people are scared and pull out money, even if, let's say 50% of the population, that, most of them do not have more than that much money. But when you add all that together, you're talking a good chunk of change when you're talking about 200, 150 million people. 150
Mhm.
million people taking out all the money that they absolutely can is going to definitely have an effect, and that could cause some issues down the line.
Yes, absolutely. And I talked about this earlier with you, Jackson, on another conversation where I believe there's also the chance of it more than likely becoming sort of a capitalistic situation, a competition, survival of the fittest type of situation where it's not that the entire banking system is going to fail. It's more like the ones that are exposed or that are weaker that are going to fail, and the stronger ones will survive. So, for example, I was talking about loan officers and real estate agents, how we're being affected by the lack of volume and opportunities to do transactions because of the mortgage rates and whatnot, right? And it's not that loan officers and real estate agents are going to disappear. It's more like the weaker ones and the ones that are not doing business are going to end up leaving the industry and going to do something else, therefore leaving the strong, and we're going to end up being the ones that are going to pick up the extra opportunities because of the lesser uh,
Competition.
population of people who are real estate agents and loan officers. I
Mm-hmm.
think the same thing might also happen with banks, right? So there's, let's say the top 20 banks are the ones that we're looking at, right? And let's say five of them fail. Well, that just means the five that were servicing clients, those clients are just going to go to the other 15, right? And those 15 are just going to be stronger, right? So there's a chance that there is no banking crash failure across the board type situation. It's more like the ones that are weaker are the ones that are being eliminated, and those clients will just end up going elsewhere with their money and their business. They still believe in banks, they still need banks. They're just not happy with the current bank, right? So I'm not going to mention any names, but if you're not getting your deposits seen with this bank, well, then you're gonna be like, you know what? I'm gonna go ahead and open them another account with the local competition or the next biggest name, and I'm gonna go ahead and just have my deposits to that bank now, and to slowly draw my money out from the current bank and eventually close that account because I'm not confident with this particular bank services. Not that I'm not confident in the banking system as a whole, right? So I think that might be a possible scenario as well. And I would consider that the better scenario because obviously we don't want any kind of across the board banking system to crash. We are okay with the ones that are not doing a good job or the ones that are exposed to go ahead and get eliminated because they didn't what they were supposed to do. They didn't do what they were supposed to do for their clients.
Yeah, no, I can see that, because I mean, capitalism is not going to just go away
Mhm.
because, a few hiccups. I mean, it's self-preserving system, just like any system that, wants to survive. And I mean, what's the alternative? We're going to go straight into anarchy,
Yep.
All
Yep.
those preppers with their MREs are going to be happy they got something to trade, but I mean, that's going to cause chaos. There's a lot of
Yes.
people are going to get hurt if something like a societal collapse happens that way. But I mean, as far as, like, when I mentioned Wells Fargo, I don't see them going anywhere.
Mhm.
They've been sued quite a bunch of times, and they've really tightened up their game to make sure that they are in the best position possible, clean up their act as much as possible in order to. I mean, I bank with them. I'm a quote unquote high value client to them, so I'm not going anywhere from there.
Yep.
But I like my statuses, just to keep. If I need anything, I can get it anytime I want, so which is really nice. But
Yeah,
um,
and they also backed out of mortgages recently, right?
sure, yeah, I
So,
mean,
so
it makes
because
sense.
yeah, they know their strengths. They know their strengths. They're not going out of business, right? They stopped their mortgage department, but that doesn't mean that Wells Fargo is going anywhere. They're
Yeah,
just
I mean, they're still
putting
doing refinances.
yeah, they're just putting the energy where it counts and where they're strong. So yeah, it would be crazy to think that Wells Fargo is going anywhere.
Yeah, they're not. I cannot see that happening. But as we're saying, the with the loan officers, and the loan officers are plenty, but the processors and the people behind the scenes, they've already been trimmed down once the refinance market dried up. So I feel like, you guys are already running at your lowest level as far as your support teams. So now it's just a matter of creating the business for you guys so that, you can continue to thrive, or at least survive anyway. Um, but I cannot see our whole system collapsing based on bank failures because we've already seen it where they were held back up. Now they may change the government may change the way that it reacts to it this time, where they make sure um, that the depositors are taken care of. Now, one thing that I would like to really see happening, or I'm curious to see what's going to happen, is because a lot of those investors into, or the depositors in Silicon Valley and Signature Bank had way over the 250,000 limit. So is FDIC going to make them fully whole, or are they just going to stick with the 250K benchmark? If that's what happens, that's going to cause a lot of trouble in the growth aspect of it. Because, if you're losing $10 million, now, you're only getting back, $9,750,000, then that's a huge difference than making sure that you're fully whole and being able to take your money and put it to work. Because that's one of the nice things about Silicon Valley Bank is they were the depositors were heavily invested in tech and the what's what I'm looking for, um oh, I can't believe I forgot the name. The
Startup.
Capital Ventures. They were all also banking right there. So if they can't bank, new startups that are revolutionizing the way we live, then we are back to a place where it's just about, maintaining the status quo and keeping things going. And I cannot see that being a good thing for where we are headed as a society. We talked about like electric vehicles earlier, and that's one of those ones that venture capitalists help make happen. And so, we know that's not very sustainable. There's only so much lithium left in the world. And, I'm reading articles where we're going to run out of lithium by 2025 unless we, refine really well what we need to do. So it's really just kind of the stepping tool to other ways of getting our vehicles on a battery powered or different fuel that is sustainable. But none of that is going to happen unless we have heavy investment from the private sector. And that's not going to happen if banks cannot hold on to people's money and make sure that they can access it and, even deposit and lend out as needed.
Yeah, absolutely. I mean, there's going to be, and we talked about this, there's going to be implications to these failures, right? But more on a micro level, right? Of course, these people who are part of these banks, they're going to be affected. Their jobs are in danger, right? They might have to go find another job, or maybe they'll be working for someone else, right? Maybe the FDIC took over. I don't know exactly what could happen. Maybe someone else could buy, maybe Bank of America can absorb them. I don't know how that all works,
Well,
right?
that's what they were trying to find people to purchase these banks when
Yeah.
the FDIC jumped in and took over. So,
Mm-hmm. Yeah. These people's lives are going to be affected, right? And then of course, all the depositors, if they're losing, uh, you know, millions of dollars because of this, of course, their companies and their businesses are going to be affected, right? So there's lots of implications, but on a micro level, right? On a macro level, we'll have to see, right? Like we've already talked about it earlier. There's a chance that this would be just sort of a result of competition, and the banking system is still going to be intact, maybe even stronger, right? And people who are involved in these banks, they're just going to end up finding different jobs, but maybe they'll find a better job, or maybe the banks themselves just get stronger in general. I mean, who knows what the actual macro level effects is going to be? But for the most part, we don't know until further notice, right? I mean, when I heard the news on Friday about Silicon Valley Bank crashing, I was like, man, this is crazy. But then when I heard that signature bank crashed, I was like, okay, this is super crazy. It's not just crazy, but it's super crazy because now you got two banks, right? Like the last time a bank fell was back in 2028. It was Washington Mutual. It was only one major bank crash. This is two, right? So who knows what's happening right now? I mean, we've this way. I'm counting the days, and it's been about 3 days, 2.5 days before another big has crashed. So maybe we're okay, but who knows what's going to happen on Wednesday?
Yeah. Yeah,
Yeah,
absolutely.
yeah.
Well, I think we covered what we can for now. And thank you, Larry, for coming on the Currently Powerful podcast, where we talk about things that are currently powerful and what is happening in the world today. And so we are good to go for that. And thank you again for coming on. And let's get together again another time. And I will catch up with you later. Have a great
Appreciate
day.
it, Jason. Thank you very,
Take
sir.
care.
You have a good day. Bye.